Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. This morning, we have RemSense Managing Director Steve Brown and Chief Digital Officer Anthony Rowe, who's going to provide an update on the company's business activities, as well as information pertaining to the recent release of the share purchase plan. Following the presentation, both Steve and Anthony will be available to address any questions submitted. You can still submit your questions by emailing me, alex@investorstream.com.au, or via the questions pane in the GoToWebinar control panel. Similarly, you can also download a copy of the presentation via the handouts pane in the control panel. I understand it was released this morning and it should be on the ASX, but if you haven't had an opportunity to see it, you can download it from our golden control panel there. And finally, a replay of the webinar will also be available on RemSense's website and social media platforms later today. But for now, I'd like to throw it over to Steve to kick things off. Steve, the floor is yours.
Yeah, thanks, Alex. Well, good morning from Western Australia and good afternoon if you're in the eastern states. So what we wanted to do today was to give a quick overview of the presentation, which was predominantly has been released earlier as part of the SPP, but also to give people the opportunity to ask questions, and this is an excellent forum to do that. So, Alex, if we can skip through the slides, please. So we just missed the disclaimer, but that's fine. You can read that at your leisure. It's on the copy of the presentation. So just to introduce where the company is and where we are. So Virtual Plant was developed under contract from Woodside Energy starting about 3 years ago now. It's a system that enables us to visualise assets anywhere, anytime, and on any device. The IBM, through some work that we did earlier this year, is now 100% owned by RemSense. It's relevant for any industry sector with a distributed asset base. So it's not just oil and gas or mining, it's industrials, it's resources, it's even asset infrastructure that we're doing at the moment with other companies. So it's a range of activities. We've signed international agreements with enterprise asset management providers like IBM. And, you know, with their SPP, we're now out looking for some additional funding to take the company to the next part of our journey, and also to pursue these new opportunities that we've had arising. So, thanks, Alex. So just a few points. Again, this was repeated in the presentation from the SPP pack. But look, we've developed a unique real-world digital twin environment. So we haven't developed something fanciful for the media market or gaming industries. We've developed something for a specific application on intensive industrial and remote asset applications. We've built a credible and sustainable business by targeting strategic partners and engaging tier one clients. And the relationships that we previously disclosed clearly promote that position. We're currently live with 2 multinational clients. Virtual Plant complements a lot of their existing systems and digital twins. The business has a clear plan to go global. We're expecting our partnership and licensing agreement revenue from IBM to start to impact the bottom line next calendar year. And we believe that our market capitalisation is not reflective of the current positioning and opportunity as compared to some of our peers. So basically, you know, we believe we're in a great place to move the business forward. Thanks, Alex. So we've previously discussed this to our investors on several occasions now, but just to reiterate quickly, early this year, we realised that we actually had a far bigger opportunity than we were pursuing when we first went through the IPO process. That is something that was a very difficult decision for us to do. This had actually delayed our revenue stream coming to the company a bit, but it opened up a much wider opportunity base. So what we did in that process is redirected resources. We developed virtual plant in a full enterprise grade environment, which means it's an extremely safe and secure environment. We refreshed our marketing strategy. We developed new features to extend the product. And importantly, we formed those relationships with key international companies that will enable the business to grow and move forward. Thanks, Alex. So we built or rebuilt Virtual Plant on the Amazon Web Service platform. We did that specifically for a reason. It seems to be the more common platform that most of the tier 1 companies are using, and it's a global platform. The big significant move that we made, that we announced, that we've reached, the first stage of releasing the product, was a relationship with IBM. So earlier this month, we actually demonstrated it for the first time at a mining conference. IBM, from that comment that you can read there, are extremely excited about the product and what it does for their suite of applications. We're also working with IBM to launch a joint corrosion inspection and reporting offering, which is being built into Virtual Plant and combines our high-resolution curated data set with IBM's extensive experience in vision analytics. So we've got this great mutual relationship going with IBM on two fronts. We've also signed agreements with SAP to certify Virtual Plant within their ecosystem, but that's nowhere near advanced as it is with IBM. We announced earlier this month again 3 new contracts, which is the start of our opportunity, process that we're working our way through, that Anthony will explain a bit further on the next slide. And we've actually reorganised and restructured the business to simplify our business model. And we've done that in a number of ways. We've done that through clarifying the IP situation, ensuring that that was a very simple process for us now to commercialise the product. And we've also reorganised and restructured our business to focus our cost base on Virtual Plant and the related services around Virtual Plant. So since listing, to get to this point, and our listing anniversary is the 2nd of November, so we're getting close to 1 year in, we've actually done the hard yards. As I mentioned before, some difficult decisions to change our focus in that process, but we're now at a great point moving forward. So I'll just hand over to Anthony to actually talk about what the opportunities are and where we're heading.
Thanks, Steve. Yeah, this is Anthony Wrong. Thank you for joining the call. I'm just going to give you a quick update on where we are on business development. So currently we still have a direct sales rolling pipeline of 11.4 million. That doesn't include the partner contributions to the pipeline. So on top of that, we have 12 opportunities with IBM we're jointly exploring, which is circa 3 mil. And then with our East Coast partner, we've got 6 opportunities, which is circa 2 mil. So you can see we're developing a nice rolling pipeline to convert, and our strategy of conversion is 4-to-1. Our strategy is also land and expand, and I'll talk about some of those deals in a second. Also, kind of ranging outside of Australia, what are the opportunities globally? We've explored with a Middle East partner some of the key oil and gas potential clients in that area, and we've had several discussions which have been fruitful to explore with some of the key tier 1s in that region. We've also explored that in Europe to understand how we would exploit the European market with Virtual Plant. We've got ongoing discussions with several partners to build the business out in that region. So we're testing and ranging that market just to understand how we need to set up to be able to execute globally as well as locally. I'm going to talk about the market size in a second, and that kind of will give you a feel for not just the size of the opportunity, but the kind of why we need to kind of be really succinct about our go-to-market strategy to exploit it and grow, exponentially. The revenue opportunities that we've seen being closed in the last quarter are a mix of virtual plant data capture and also some kind of processing revenue streams. So these are what we were expecting, and we've been pleased that our predictions of the types of deals that we've been able to close have been what we plan to close. I'll talk again about the specific IBM relationship and some of the criteria to expand that, and I'll talk about that in a second. But firstly, I wanted to move to why is our solution being received so well in the marketplace. Next slide. Thanks, Alex. Next slide, Alex.
Yeah, so
no, go back. Sorry. You're not moving on screen. So I spent 25 years in the asset management industry, and I also spent 10 years in industry itself. And one thing that has been evident throughout my time in that industry, and both technically and from an industrial expert, is that the asset management systems, whilst they have emerged, have also proven to be limited and kind of reached a ceiling to some extent. And you'll see from the diagrams of some of the examples of what an actual asset management record looks like. They're pretty much form-based, they lack accuracy, they're hard to navigate, poor or no context. You need intensive training and then weak flexibility to change the asset structure. So what we've actually, if you can move to the next slide, please, Alex. So the problem we solve is this new ways of working, which the industry's been seeking to gain for the last 5 or 6 years. There's been a few attempts to achieve this experience, but none of them have really proven successful. And I'm talking about traditional digital twins of like a traditional nature and other kind of photographic or experiences that's been tried, but not taken hold. What virtual plant is providing is this human-centric experience for the user across the assets to be able to put into context how they operate. And also, it doesn't mean you've got to replace the existing systems. So this in its nature is why IBM and others have seen this really interesting leverage that they can take by aligning with RemSense to put a new, fresh user experience across their operating systems. But what is the kind of market opportunity? I'd like to just touch on that so you can get some kind of gradient on that. So the estimated total market size, if you just were going after the maximum market, is quite significant. You can see the headline figures. And to put that into a global context, you know, the maximum asset management products probably 30% of the actual asset management market. And of the other 70%, the other providers also do not have this visual experience to be able to navigate quickly and effectively to assets. So we've selected or leveraged with IBM in this first instance because technically the two products align pretty well. And some of our early business development exploration with clients has brought the two organizations together. And we are currently hunting 12 deals for this quarter to be able to kind of cement that relationship and build off from that. So if you look at the overall global market, which is obviously exponentially bigger than the maximum market, it kind of gives us the confirmation that the visualization platform for the asset management and industrial arena is significant. And also the other thing from a market perspective and penetration perspective, from what we've seen with the clients we've currently gained and built off from, that this product is extremely sticky. So the clients are telling us that this product is providing value in all sorts of different areas, and new use cases appear from time to time for the clients asking us, and one just appeared last week where event management is something that the clients want to capture photographically, not just an asset management system kind of new user experience. So we're seeing actually really growth in how virtual plant can be used. The key to execution of this is the right partnership models with the right direct sales team, with the right product and the right framework. And we've actually got all those building blocks in place now. We're now ready just to execute these contracts and just keep the momentum building. So therefore, the market size and the global penetration will probably see us next year looking further afield to exploit that. So hopefully that gets you a feel for, why is virtual plant key to the clients and also key to our collaboration partners, and then also the scale of the market we're trying to address. Thank you, Steve.
Okay, so that's the the brief presentation that we wanted to get across. So it's now questions. So we'll open the floor, and I guess Alex, you'll be coordinating that.
Yeah, thanks, Steve. Look, thanks, Anthony, as well for presenting. We've had a couple of questions come through over the course of the webinar. Steve, just to start with you, can you just provide some metrics for the use of virtual plant in Woodside, considering you recently released a new version and Woodside are a cornerstone tier 1 customer?
Yeah, sure. So we announced to the market that we released V2 and concluded a 2-year SaaS initial contract with Woodside. So from V2 basically went fully live within Woodside on August the 21st. So between August the 21st to October the 21st, so essentially about 2 months, there has been 60,000 page views. So each page is obviously a virtual plant screen, and the average engagement is 5.5 minutes per page. So that's quite a substantial amount of use over the last 8 weeks and represents about 330 registered users within Woodside and their contractors.
Thanks, Dave. So why did Woodside sell the IP if virtual plant is such a good product?
It didn't fit into Woodside's business model. I mean, Woodside is an energy company. They're doing a lot of work on new energy and green energy, as well as developing their existing assets and their relationship through the BHP assets that they've picked up. So it's really not in their business model to be part of, effectively a license arrangement like this. It was also extremely important for us to simplify the commercial arrangements, particularly when we're entering into agreements with IBM and others. So, it was a very mutual meeting of the minds and an excellent deal for us and a good deal for Woodside. Thank you.
So sorry, Steve, did you want to add to that?
No, that's it.
Okay, so what revenue will you need to become cash flow positive then?
Look, we're basically at the moment, based on our existing overhead, we're targeting something like a $5.5 to $6 million revenue to be cash flow positive. That depends on the mix of work that's happening at any particular point in time, but it's not a very large stretch target for us.
Thanks, Steve. Now, I'd just like to throw it to you now, Anthony. Can you just give us a flavour for who your peers are in the market, and I guess what differentiates you yourself from those peers in the market with you?
Yeah, thanks, Alex. Yeah, we're watching closely for peers to emerge in this market. The photogrammic platform peers actually is still just emerging. There are several we've spotted have come to light in the last couple of quarters. Some in the US, some in Europe, but they're kind of in the early stages of development. We've actually been speaking to them in the view of collaboration. In the kind of general visualization of assets peers, we see a lot of them like Aviva, Hexagon, others who are big organizations who are struggling to operationalize that technique. So we're obviously in discussions and talking around how we can collaborate with everybody in that space, so kind of frenemies, if you like. I think ultimately we want to work and collaborate with as many organizations as possible to get the technique of a visualization out there. What differentiates us from what we've seen in the space is, I think because we went early to build it enterprise grade and picked a horse in the AWS stack and also picked the collaboration partners we have, I think that's actually advanced us quite a lot. And that's what some of the organizations in Europe, who you would call pseudo peers, have made that observation. So I want to call out probably Senesco, who are in this space, who we've agreed to collaborate and kind of hunt together. And there are some overlaps, but predominantly our platform is clean for integration to some of the asset management systems. So therefore, that collaboration is going to kind of give more differentiators to both parties. So we see the collaboration with peers as being like leverage for each other. So there isn't a one dominating party yet. Obviously, we want to be that, but we're watching that market very closely to see how it develops.
So, Anthony, you touched on it a little bit in the presentation, but would you be able to just sort of run us through how much interest you are getting from overseas?
Yeah, the interest is actually it's peaking, and the challenge we've got is how do we fulfill that market? We want to be sustainably, deploying our resources where we can to effectively, from a data capture perspective, train the trainer with our probably kind of unique techniques. So we're picking carefully the opportunities we kind of want to deliver to closure with the partners we've selected who also have close relationships with these specific clients. So for example, in the Middle East, which is all about relationships, our partner there has picked the specific client we are engaged with, and we're developing that at the right pace so that we can keep our promises. But the potential for those particular projects are phenomenal. In Europe, the partners we've picked to work with, there is like synergies between the two organizations. And the specific partner we've picked are in primarily initially in our hotspots of oil and gas and mining. And therefore we'll develop them at the right pace so that we can keep our promises. And we'll concrete some of those agreements in the end of this quarter and next quarter so that we empower our partners to execute on our behalf in those regions.
So, Anthony, for anyone who is interested in how Virtual Plan actually works, where can we see a demo so we can understand a lot better how it what it does exactly?
Yeah, well, that's a great point, and quite a lot of observations are we're a visualization company, so surely there should be lots of opportunity to see that visualization, and we've acknowledged that, and we're currently in a revamp of our website to be able to show all of our great visualization use case examples, and also we're proposing that we'll just have a pure product day for our for partners and investors to see. So we're going to do a webinar in November where people can join and just we'll show them all the greatest and latest of our products and capabilities.
Now, Anthony, I understand you've just recently returned from a conference in Norway. Was there anything of value? What were the key value drivers for that? And was there anything that really stood out to you from a marketing perspective? What were the key standouts for you from that trip?
I think one thing that did come out of that conference and a few others that we've been to recently is the pent-up kind of energy that the industries have obviously been subdued by COVID. I think we're all now kind of trying to forget COVID quite rapidly, but actually there's a lot of pent-up activity that didn't get fulfilled by organizations within that time period of 2 years. So it's interesting how we felt it had been throttled back, but what was evident at ONS is the absolute appetite to invest, the absolute appetite to improve performance, and the absolute appetite to, use digital technology as one of the conduits to things like better ESG, better environmental, and towards net zero, as well as, producing product, on a more effective and cost-effective method. And so there was excitement, and anybody who's been to trade shows over the years, sometimes they are a bit pedestrian, to say the least, at times. The last 3 or 4 we've been to have had masses of energy, and therefore probably the most interesting trade shows I've been to in kind of 20 years.
Excuse me, I might just add to that, Alex, that the relationship that we're building with Synosco came straight out of that participation at ONS.
Okay, thanks, Steve. So now, Anthony, you've said the sales cycle is up to 12 months. Where do you think you're at with some of the earlier clients that you've pitched to?
Yeah, it's interesting because, I've come from an enterprise sales background for the last 20 years, and the maths is pretty, proven, if that makes sense. So the maths that you measure yourself by have been well trodden by many organizations in producing revenue and profit, etc., and growing. So once we set the stall out to strategy for a pipeline of 4 times, coverage per rep, and then obviously we want to see execution of that 4 times coverage, and then we want to see the metrics of close rate, win rate, etc. So we introduced Salesforce.com, which is an enterprise CRM system which all of the tier ones use, and those metrics are confirming that typically the sales cycle is 12 months. We did close 3 deals last quarter, or like within the last 6 weeks, which proved that as well, because those deals were kind of started at the back end of last year and came to fruition, when they did. The interesting things as well is our strategy is land and expand. And as you've seen with Chevron, they initially placed an order with us, and then the second order was double the investment. With the renewables organization and the service providers, we've just placed contracts with us. We also plan to have that prove what we can do, show the value of the product, and we're expecting those projects to then have continuous expansion. And that's without the addition of getting net new clients on top of that. So we think circa 12 months is the sales cycle from start to finish. Some will come earlier, and some of the bigger ones will be later.
So, Anthony, just with IBM, how does it work with regards to what RemSense get paid for an IBM Maximo job? Do you pay them a commission? Could you just expand on what the material commercial benefits are with the IBM partnership?
Well, we do have enterprise agreements in place and global agreements with IBM. In specific relation to Maximo, how we are hunting with their sales force is it's a leverage that IBM get by being able to introduce this new capability, new ways of working. So it's enabling the conversation for the IBM traditional sales team to revisit their existing clients with a new point of view. So we don't pay IBM anything for that. We don't pay them commission for that perspective. So when we close a deal together, we get 100% of the virtual plant revenue. They get 100% of any components they can add on to Maximo. So, and we are kind of the sizzle on the steak, if you like, for the trying to launch 8.6 and get uptake of that product, which is a new product, around their existing user base. So in that case as well, though, when we do sell through our embedded software agreement, the software sales reps of IBM get commission from IBM for that leverage. So it's a perfect world for us.
Absolutely. Now, Steve, I'd like to bring you back in if I can. Just finally, as we're sort of near the end of the calendar year, what are the key near-term catalysts for the company that we should be keeping an eye on as we head to, the end of the year?
Well, we're continuing to hope that we'll be able to release some new information on contracts that are being progressively awarded and progress of our work with IBM. I can actually say today that we're currently commencing a pilot program with Programmed. Programmed are a leading Australian New Zealand facilities management company and a Maximo user. So the pilot involves virtual plant scanning of some key infrastructure on Rottnest Island off Perth, and the integration into Programmed's existing Maximo asset management system. This pilot will be finished this calendar year, and it's the first time that we're going live with virtual plant into a live asset system with a new client. So this pilot is a great start for us. And we're building off that as we progress and move forward. So what we would hope to be able to report is a continual stream of good news and opportunities that we've been developed now that the hard yard's been done with developing the software product itself.
Fantastic, Steve. Well, look, that's all the time we have today. I'd like to thank both Steve and Anthony for presenting and taking the time to answer some questions. Now, as I mentioned before, a recording of the webinar will be on RemSense's website and social media platforms later today. Steve, before I let you go, do you have any final comments to leave with us today?
Yes, we've gone to the market with an SPP. We've listened to our investors on the story that we're presenting about the company and to try to educate our investors more about the business and what we're doing. So we have been issuing a lot of newsletters, a lot of updates on the market as to where we're sitting. We intend to continue that on, and we certainly encourage all of our existing shareholders to participate in the SPP.
Fantastic. That wraps it up for us here. Thank you, everyone. Have a great day.
Thank you, Alex.
Thank you.